Namaste, good morning. What I popularly call as part B or phase 2 of our classes, which majorly is going to focus on only going to focus on consolidated learning and specialized learning of that particular assessee or environment. So, in that, my first we start our entire discussion with assessment of firms slash AOP slash BOI, basically firm. You can restrict the firm and then we will go to AOP BOI. Assessment of firms, association of person and body of individuals. Well, the terminology firms include LLP in our income tax law. The term firm includes LLP and the same meaning as partners, etc. How we are going to study this? First, I am going to consolidate the provisions of firms from various chapters. First, let us understand theoretically from various chapters how firms are getting taxed or what are all the special provisions available for firm. And then we look into the practical aspect. First, the theoretical aspect. Before going into the theoretical aspect, I still know, I understand, I acknowledge, and I clearly say that the one part which will be consolidated later is taxation of dissolution of firm. As I said, I am still waiting for the material, so that is a separate arena which we will take it up later. But other types we will consolidate the entire aspect of a firm. It starts with what is a firm. The explanation, what constitutes a firm? How will I say a particular entity is a firm? Income tax law has given three conditions. Three conditions to classify or to assess an entity as firm. One, it should have a written deed. It should have a written deed. Two, share of profits of the firm partners should be clearly mentioned. Share of profit of the partners should be clearly mentioned. And three, the deed should be filed with the department first time and every time when there is an amendment. Okay. Three conditions which are essential to classify an entity into firm. Should have a written deed. Remember, partnership law might say that even oral deed is acceptable, but income tax law is clear, the deed should be written deed. The share of profits of the partner should be clearly mentioned in the deed. Once more, partnership law might say if it is silent, it is assumed that partners are sharing equally, but income tax law does not recognize that. Income tax law says, say that it is shared equally. And third, the deed should be filed with the department. If all these three conditions are satisfied, I will call it as a firm. Even one of the condition not satisfied, I will only consider it as association of person and not a firm. So we have two popular abbreviations, PF, AAS, partnership firm, assessed as such as a firm. PFAAOP, partnership firm assessed as association of persons. It's a partnership firm, but one of the conditions is not fulfilled. So it is association. Okay, evidenced by a written deed, share of profit clearly mentioned, fine. All the three conditions fulfilled, firm. Even if one of the condition not fulfilled, it is an AOP. Oh, 1 minute. Sorry, Aranganaki, I just saw. Am I clear? Okay. PFAAS, PFAAOP. Right. This is 184. Progressing forward, let us start from the top. Residential status of a firm. When will you call a firm as a resident firm, and when will you call the firm as a non-resident firm? The terminology here is control and management. For firms, AOP, BOI, everything, the terminology is control and management, where the decisions are made. If the control and management is partly or wholly in India. Remember, even partly in India, I will call it as a resident firm. If the control and management is partly or wholly in India, then it is known as a resident firm. Otherwise, it is known as a non-resident firm. If the control and management is wholly outside India, which is very rare, which is close to impossible. All the partners should be outside India and they should never visit India. Visit India itself, it is partly in India. If all the partners are outside India, they do not visit India, then only you can prove that it is wholly outside India. But the LLP and all, you cannot have only non-residents as partner. Designated partner in LLP or concept. You should designate an Indian partner, a resident partner. Okay, so the concept of firm being non-resident is very rare. Okay, but generally control and management wholly or partly in India, resident, wholly outside India, we call them as non-resident. Okay, so initial chapters, then comes residential status, then comes section 10. Section 10 has one specific provision: share of profit for partners is exempt. 10.2, okay, 10.2, share of profit of partners is exempt. Share of profit now, after paying taxes, whatever is credited to partners capital account is exempt. Okay, 10.1 is agriculture income, 10.2 is this, and 2A will be this HUF, etc. Right. Salary does not have a specific provision for a firm. Salary chapter does not have any specific provision for a firm. House property chapter does not have specific provision for a firm. Okay, these are in the normal way, it is being computed and taxed. They do not have a specific provision for a firm. That leads us to the third chapter, business or profession, which has majorly one section, section 40B, which is applicable for firm. Okay, if you remember PGBP, we said we will discuss this in assessment of firm. But before that, whenever there is a conversion of a firm into a company, succession or vice versa, we all know there is a concept called proportionate depreciation. What is that? Compute the depreciation, distribute the computed depreciation between both the entities based on effective usage period. Based on effective usage period, in our depreciation working, Pushpak and Co. was converted into Pushpak Limited. We have done a question where we would say from 1st March only we will take for the company, because effective usage period is only 31 days. Though from 1st November it has been converted, 1st November or 1st December. Okay, so accordingly, where an asset is used by both the entities, depreciation will be computed, and such computed depreciation will be distributed between the entities based on their effective usage period. Based on their effective usage period. Now comes the most important section of firm, which is section 40B, interest, commission, etc. for a firm. Interest and remuneration to partners. Okay. Let's write it once, because it is one of the important provisions. Let us write it once. Section 40B. Okay. Interest and remuneration to partners. Interest and remuneration to partners. Let us write it once, because this is the major area for a firm to understand. The laws in the many areas only are more important, capital gains, etc. Okay, right. Interest on capital and remuneration are allowable, okay, provided it is mentioned in the deed. The first condition to understand is deed should authorize payment of interest on capital. Deed should authorize payment of interest on capital and interest to remuneration to partner. This is first condition. What is meant by deed should authorize? Deed should have that particular clause. Deed should have that particular clause. Are you clear? Okay. Interest on capital and remuneration. Maximum interest on capital and remuneration shall be either as per law or as per deed, whichever is less. Maximum interest on capital and remuneration that can be paid is either as per law or as per deed, whichever is less. What is this? So in the first condition, we said deed should have a clause. In the second condition, it should quantify. Okay, I just cannot have a clause. Remuneration can be paid to the partners. Not sufficient. Not sufficient. You should say what is the remuneration that can be paid to the partners. If there is a clause in the deed, remuneration can be paid to the partners, I will take it as nil. And in this condition, what says? Either as per law, which is 40B, or as per deed, nil, whichever is less, so I cannot pay remuneration. Repeating, it is not just mentioning in the clause, it should also quantify what can be paid as remuneration. Quantification, I am not I'm not saying do it like this quantification, do like that quantification. Quantification, I give you a free hand. Quantification, I give you a free hand. What do I mean by for quantification, I give you a free hand? You can say remuneration is paid as a percentage of profit, 15% of profit. That is also quantification. But a mere mention is not quantification. Without mention also, it is nil. By mentioning also, if it is silent without quantification, it will be deemed to be nil. Okay, so these two. Okay, now restricting to interest on capital. Interest on capital as per tax law, 12% per annum. As per IT law, as per section 40B, the maximum interest you can pay is 12% per annum. Now understand. If the deed says 10%, 10%. If the deed says 15%, 12%. Because the parent legislation is either as per law or as per deed, whichever is less. Okay, this is interest. Now let us look into remuneration. Before looking into that, let us understand what is remuneration. Okay, salary, bonus, commission, or any other sum paid / payable to a partner by a firm. What is remuneration? Here, salary, bonus, commission, or any other sum, residuary clause. Salary, bonus, commission, or any other sum of money or by whatever, okay, paid or payable to the partners by the firm is known as remuneration. Is known as remuneration. Am I clear to you? This is known as remuneration. This any other sum means partners cannot enjoy extra benefit. Sir, this partner is working for more time, sir. So I am paying extra some money. That is also remuneration. You can pay. That is within your act. Partnership law gives you or your P&L or your agreement says. But for us, it should be all these things put together is only known as remuneration. ஒரு ரெண்டு கொஸ்டின்ல வரும். I'll tell you. Okay. Commission paid to a partner for securing orders. Every partner is eligible for 20,000 rupees as salary. One partner is involved in the marketing, so he will be paid an extra commission of 5% on sales because he is in charge of sales. That is for your agreement purpose. For income tax law, when they compare as per act or as per deed, they will take that 5% also and compare. அது தனி கிடையாது. It is also within the overall limitations going to specify. Remuneration is payable only to working partners. One of the most important condition under income tax law is remuneration is payable only to working partners. It cannot be paid to all. It is payable only to working partners. Remuneration is payable only to working partners. Okay. right? But every partner is a working partner. It is very, unless the partner himself says that he is a dormant partner, you cannot prove he is a dormant partner. Signing of one voucher itself means he is a working partner. Attending office, he is a working partner. How will you disprove those things? So this is a theoretical provision, but remuneration is payable only to working partners. Okay. Now I come to what is the remuneration payable in the law, in the, as per Act. Remuneration as per Act depends on the, what is that? Book profit of the firm. Remuneration as per Act is dependent on the book profit of the firm. Okay. What is the book profit? That only determines remuneration. Now we have to understand what is book profit for that. What is book profit for that? Book profit means profit as computed under this chapter. Under this chapter, now which chapter? Which chapter? 40B. Yeah, PGBP. Yeah. As this chapter means PGBP. Okay. Before providing remuneration, but after providing interest on capital. Book profit means profit as computed under PGBP chapter before providing remuneration, before allowing deduction under for remuneration, but after providing interest on capital. So what is book profit? Add inadmissible expenditure, less non-business income, less depreciation allowable as per IT law. இது எல்லாத்தையும் whatever we did in PGBP, that answer, even after reducing interest on capital, the answer I get is known as book profit. So remuneration is dependent on the book profit. Book profit means this. Okay. In case of loss, rupees 1,50,000. Loss is, even a loss-making firm can pay remuneration to partners. In case of loss, it can only be 1,50,000. Where book profits does not exceed rupees 3 lakhs. Where book profit does not exceed rupees 3 lakhs. 90% of such book profits or rupees 1,50,000, whichever is higher. 90% of such book profits or rupees 1,50,000, whichever is higher. Are you clear? Okay. Where book profit does not exceed up to 3 lakhs of book profit. Suppose book profit is just 1 lakh, you pay 150, no problem. Suppose book profit is 2 lakh, you pay up to 180. 90% of book profit or 1,50,000, whichever is higher. So even if the book profit is only 1,50,000, you can pay the entire 150 as remuneration. 90% of book profit where book profits exceed rupees 3 lakhs. Okay. On the first 3 lakhs, 90%, and on the balance 60%. Are you clear? Okay. On the first 3 lakhs, 90%, 2,70,000, and on the balance, suppose if book profit is 10 lakhs, 2,70,000 plus 7 lakhs into 60%. This is as per income tax 40B. Parent rule says either as per law or as per deal, whichever is less. Okay. Are you clear? Okay. So this is for remuneration. Interest and remuneration which are allowed in the hands of the firm is taxable in the hands of the partners under PGB. Interest is not taxable under IFOS. PGBP remuneration is not taxable under salary. For the partners, they are taxable under, okay, right? Right? Okay, friends. Once more, remuneration and interest are allowable only if it is mentioned in the deed. Deed should quantify it. It is either as per act or as per deed, whichever is less. Interest on capital is 12% per annum as per act. Remuneration depends on book profit. Book profit is nothing but our PGBP computation before allowing remuneration. And as per act, it is even a loss-making firm can pay up to 150. Profit-making firm, profit up to 3 lakhs, 90% of such profits or 1,50,000, whichever is higher. Profit exceeding 3 lakhs, on such excess you can pay 60%. The allowed remuneration, remember, the allowed remuneration and interest are taxable in the hands of the partner under the head PGBP. Under the head PGBP. Now I am going for some special points. Now I am going for some special points. And the first point I am going to speak about is one of the repeated questionable area in our papers. The first point which I am going to speak about. Okay. Amendment in partnership deed. The first point I am going to speak about is what happens if there is an amendment in partnership deed. Okay, right. Imagine a circumstance that my partnership deed does not have interest on capital clause. So interest cannot be paid. On 1st of October 2021, I amend my partnership deed to say interest on capital is payable to partners with effect from 1st April 2021. Okay, what is popularly known as retrospective amendment to the deed. Okay, it is payable from April 21 or June 21, etc. This on one side. Income tax law does not permit retrospective amendment. Okay, law says any amendment to the deed will be applicable only from the date of amendment. Okay, only from the date of prospectively only and not retrospectively. What this technically means? It technically means if in the given example I told you from 1st of October the deed is amended, interest on capital can be paid to partners only from 1st of October. So for the financial year 21-22, only 6 months interest can be paid. Okay, capital into rate into 6/12 can only be paid. Remember, my dear friends, remuneration and interest can be paid provided it is mentioned in the deed, and if the deed is amended, nothing wrong, but no retrospective amendment or no effect to retrospective amendment under our law. It can only have a prospective going forward amendment. So the law says any amendment to the deed will only be applicable from the date of amendment and not retrospectively. This is a repeated adjustment in our questions. They will say it has been amended, but it has been paid for whole year. That like that they will be specifying. Can partners claim expenses? We just said interest and remuneration are which are allowed in the hands of the firm is taxable in the hands of the partners under PGBP. If a PGBP, in PGBP I say you can claim so much of expenditure, allowable expenditure. Can partners claim expenses? Hmm? Why PGBP doesn't allow? Okay. Business expenses are claimed by the firm. Okay.
Interest on borrowed capital.
That's very good. Good answer. In the case of interest on capital, okay, yeah, I have invested capital. I borrowed money from Pineapple and invested into the firm. Firm pays me interest. I pay him interest. Claim it. In case of interest on capital, this is logical. That is, I have borrowed money and invested in the firm. The firm is paying me interest, and the interest I am paying for that borrowed money, which I have done, okay, can be claimed. Okay, in case of interest, okay, interest on money borrowed for investing in the firm can be claimed as deduction. Against our interest on capital, I can claim interest on money borrowed for the purpose of investment. Okay, and as a rule, now remember, no other expenses, as you were all saying, can be claimed against interest or remuneration. You cannot claim any other expenditure. This is the only expenditure they will permit. No other expenditure can be claimed as deduction. Okay. No other expenditure can be claimed as deduction. As an additional point, I am telling you, section 194A is not applicable here. For interest on capital, you need not deduct tax at source. For interest on capital, we need not deduct tax at source. Only exception is if interest on capital is paid to a non-resident, section 195 is applicable. 194A, normally interest, TDS on interest other than securities, like savings plan deposit, fixed deposit, etc. Okay, please remember 194A is not applicable for interest on capital. So firm is not liable to deduct interest on capital, TDS on interest on capital. Whereas if a partner is a non-resident, section 195 will be more dynamic. Section 195 will be applicable. Okay. Read through once. Please read through once. Let me finish the last part also and give you some more time. Interest on loan. Interest on loan. Interest on loan. Partner has provided loan, Venkatesh. Partner has provided loan to the firm. The firm pays interest. Which provision will cover this? 40B. Will 40B cover this? Okay. The answer is no. 40B is interest on capital and remuneration. Which provision will cover this? Related party. 40A subsection 2. A subsection 2 covers this. Okay, that's the first answer which you have to understand. So what is that provision? 40A2. It will be allowed at, according to 40A2, any payment made to a relative should be at fair market value. Where the payment is made in excess of fair market value, such excess will be disallowed. What is fair market value? Huh? What is fair market value? SBI rate எடுத்துக்கலாமா? 18%, 16%. Okay. I'll tell you why I'm taking this time is to make you understand the interpretation in a fantastic manner. Okay. RBI rates. That's what. Okay. 18% or 16%. Can I take means? The answer is no. For example, RBI rate, fair market value is 16%, for example. Then why will I contribute it as capital? What is the interest you are giving for capital? 12% per annum. We just saw. Let me contribute it as loan and enjoy higher rate of interest. To counter this issue, the law has said interest on loan is also restricted to 12% if the loan is contributed by partners. Okay, you cannot, by interpretation, when I say interest on capital is 12% per annum, you cannot now try to enjoy a better interest by contributing it as loan. Okay, so FMV, okay, FMV of such interest will also be 12% if it is contributed by partner, if the loan is provided by partner. FMV of such interest will also be 12% if the loan is provided by the partner. You cannot pay more than that. Loan provided by spouse of the partner, relative party, now it will be RBI rates, whatever you said. Okay, right? Whereas loan provided by relatives of such partner slash loan provided by partner in representative capacity. Loan provided by relatives of such partners and loan provided by partner himself, not in the capacity of a partner, but in representative capacity. Sir, I am a partner of a firm. The HUF in which I am a Karta provides loan to the firm. I am a partner of a firm. The HUF in which I am a Karta. Another firm in which also I am a partner. The company in which I am a director provides loan to the firm. So now representative, where loan is provided by relatives of such partner or loan is provided by partner. Okay. Okay. Market values will be considered. Okay. Fair market value will be the actual market interest prevailing rate, or whatever you call it as RBI rate, etc. will prevail. Okay, this is also a very popular adjustment in our paper. Okay, having said that, Sollukannan, you have this is only for your class purposes. Okay, note, if you can write it and keep, if the question is silent, consider up to 18% as FMV for other loans, not partner loans, for other loans. Okay, consider up to 18%, not for partners loans. Partners loan 12%. For other loans, you can consider up to 18%. Are you clear? Okay. So this is also one thing very interesting, that is 18% you can go if the question is silent, but majority of the time they give some questions. If they are silent, you take that, you write the provision and say it is as per the fair market value. Okay, that is the second, that is what is discussed here. Okay, no expenses can be claimed. Okay, remuneration is only payable to individuals, whereas interest on capital can be also be paid to companies, etc. Remuneration paid to a director of a company and that company is a partner in the firm, then remuneration is not covered under 40B but under 40A subsection 2. Okay, interest on loan provided by partner is not covered under 40B but under 48(2). However, the interpretation we understand that the fair market value can only be 12%. Okay, interest on loan provided by spouse of a partner, provided by partner in a representative capacities are covered under 40A(2). Market rates will prevail. Or loan borrowed for the purpose of investment. No limit, no limit, no. No, we cannot. Yeah, yeah, only up to the amount of interest received. Yeah, yeah, no, 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 no. Again, not against remuneration. That is the special provision for firm in PGBP. Capital gains, we already know the special provisions. We have seen it when we did capital gains. Conversion of a firm into a company. Okay, all assets and liabilities should be taken over. Assets and liabilities should be taken over at book values. Partners' share of profit should be their shareholding pattern in the company, and at least 50% should be held by the partners for a minimum period of 5 years. Okay, all the assets and liabilities before conversion are to be taken over. Okay, all the partners immediately before conversion should become shareholders. The partners of the firm do not receive any other consideration. The partners of the firm become shareholder in the company in the same proportion in which capital account stood, and for 50% voting rights should be with them for a period of 5 years. If you look at the other thing, conversion of private limited company into an unlisted company. Okay, we have the same, into an LLP, we have the same conditionalities. Extra, it will be 60 lakhs and 5 crores of net worth. Turnover should not exceed 60 lakhs and net worth should not be more than 5 crores. Okay, otherwise the conditions are the same. We saw this when we did capital gains. Okay, we will do questions and see also. Solda Raja. Introduction of capital asset by partner. Full value of consideration will be value recorded in the books. We saw in one of the questions also, it is not fair market value, it is value recorded in the books. The solution we are yet to see, we will see it as a separate unit. Okay, so salary chapter doesn't have any special provision. House property chapter doesn't have special provision. PGBP, capital gains, this is what we saw. Then if I look at IFOS, there are no special provisions for the firm. Clubbing doesn't have any special provision for the firm as such. Okay, right? Then the next is set off and carry forward and set off of losses. This has one special provision which is a questionable area. Which is a questionable area. What is that? My dear friends, loss pertaining to a retired partner, okay, cannot be carried forward by the firm. To be more elaborate, where there is a reconstitution of a firm, listen, where there is a reconstitution of a firm due to retirement or death of a partner, where there is reconstitution, not due to admission, not due to change in profit sharing ratio, where there is a reconstitution of a firm due to retirement or death of a partner, that portion of loss which belongs to the retiring or the deceased partner cannot be carried forward by the firm. 4 partners, 10 lakhs loss, equal partners, one of them retires, 2,50,000 worth of loss, firm cannot carry forward. It can carry forward only the balance 7,50,000. That portion of loss which pertains to the retiring or deceased partner cannot be carried forward by the firm. Okay? Where there is a change and the change is due to retirement or death of a partner, such portion of loss pertaining to that partner cannot be carried forward by the firm. Contract law is superior. Contract law says all the rights of the deceased partner will also be enjoyed by the legal heir. Income tax law also says, I understand. Suppose if the legal heir is appointed as a partner, legal representative, spouse, children are appointed as partner. Okay, are you understand? Suppose if the legal heir is appointed as partner, then the loss can be carried forward. Then the loss can be carried forward. If the change is due to death of a partner and the legal heir is appointed for the same benefits, then the firm can continue to carry forward the losses. This is only for death of a partner. If the legal heir is appointed, you can. Am I clear to you? Okay. Change in the constitution due to other reasons are not applicable. Only if it is due to death or retirement. Provision is applicable only for loss. Unabsorbed depreciation can be carried forward even if there is a reconstitution. Okay? Okay? All right. Second, a partnership firm is converted into a company. Can the company carry forward the losses of firm? Yes. How many years? Okay. Business loss? For the balance period. Right. Okay. The parent provision which I said, provisions will apply to the transferee entity as it would have applied to the transferor entity had there not been any conversion or any event happening. So you can. A partnership firm converted into company can carry forward the losses of the erstwhile firm. Vice versa. A company converted into LLP, the LLP can carry forward the losses of the erstwhile company. In both the cases, one thing cannot be carried forward. In both the cases, firm converted into company or company converted into LLP, in both the cases, one thing that cannot be carried forward or one thing that will be lost is MAT credit, AMT credit, because basis of computation itself is different. Other things can be carried forward and set off. MAT credit or AMT credit, lost is lost. Okay. Losses and unabsorbed depreciation can be carried forward by the company and set off over the balance period. All conditions, that 5 years, etc., all conditions should be fulfilled. Similarly, losses and unabsorbed depreciation can be carried forward by LLP and set off over the remaining period. All conditions under 47 needs to be fulfilled. However, if the company has any MAT credit, that cannot be carried forward by LLP. Am I clear to you? Okay, right.
Where the partner has died and that is appointed as partner for the same benefits. So, what exactly is
Yeah, the question which I want to answer, okay. I have written the provision as where if there is a change due to death and the legal heir is appointed for same benefits. Imagine a circumstance, ABC are partners sharing 1:1:1 equally. C dies. Normally, the share of loss of C cannot be carried forward by the firm. But spouse of C is appointed, it can be carried forward. To get the benefit of this provision, spouse is appointed for 1% share. 49.5 A will take, 49.5 B will take, 1% C spouse. Now also the firm cannot carry forward because you are trying to namesake put her as a partner where the legal heir is appointed for same benefits, appointed for 1/3 benefit. Then only you can carry forward.
So here benefit means profit
share of profit. No. Share of profit. Okay. Then the next arena for partnership firm to understand is again succession of a firm and the liability on succession. Partner's liability is one other terminology. Yeah, thanks. Good. Joint and several. Okay. Partner's liability is joint and several. Adodiya fullest meaning in our income tax law. What do you mean by that? A firm is dissolved, my dear friends. Now the firm has some tax dues. What income tax department will do is, they will catch hold of one partner and ask him to pay the full liability. This partner cannot say, sir, I am only a 1/4 partner. I will pay my share of partner's liabilities, joint and several. The partnership law says one acting for all or all acting for one. So, here and all I will use Partnership Act. Very biased, you know. Partnership Act says, I'll tell you, if all act becomes human beings, personified, Partnership Act will kill all other acts. Injustice, defamation case file பண்ணுவாங்க. Nobody recognizes that entity. Income tax law starts by saying you should have a written deed. Partnership law says deed can be written or oral. Written. Partnership law says if the share of profit is not mentioned, then it is understood that it is shared equally. It is deemed. Income tax law says share of profit should be mentioned. Equal, not specify equal. If you don't specify, you are not a firm, you are a AOP. Partnership law says remuneration can be paid, interest can be paid based upon the capacity and individually. Income tax இவ்வளவுதான். Company law goes one step higher. You are not even a person. You cannot hold shares. Partners can jointly own the shares, but I will not give the shares in the name of the firm. But partners liability is joint. Okay, that seems to be beneficial for me. So partners liability is joint and several. So even they will catch hold of one partner and do it. Okay. Where any tax penalty or any other sum is payable by the firm for any assessment, then every person who was a partner of the firm during the relevant previous year and his legal representatives, if the partner is deceased, are jointly and severally liable for the firm. One of the questions which we will see is the assessing officer attaches the bank account of one of the persons, one of the partners. Is it correct? Valid? You can just catch hold of one partner and ask him to pay the whole liability. Okay. Succession of a firm. Where a firm carrying on business or profession is succeeded by another firm due to death of a partner, then two assessments will be made. Predecessor firm till the date of succession, successor firm from the date of succession. But as far as tax is concerned, I will even collect it from the successor firm. Okay. Where a firm is dissolved or the business of the firm is discontinued for the purpose of any proceeding that are pending and for the purpose of initiating any proceedings, the firm shall be deemed to be in existence. Okay. I'll do it in assessment also. Assessment can be done even after 2 years, 3 years. You wound up the firm. Sir, the firm is not there, put it on, sir. But for assessment purpose, it is deemed to, the firm is deemed to be okay, in respect of tax, penalty or any other aspect, all partners who are there at the time of dissolution or the legal representatives of the partners should be liable. Okay, I have already told you this. I again tell you loudly and clearly, nothing. For those who want to commit suicide, they should learn income tax law. They are putting another person in a bigger problem. Now, they think that once I die, everything is over. And that too, raid if they are going to commit suicide for the purpose of raid, first raid income tax officer. You are putting your whole family into a problem. Okay. The tax rates, base rate is 30%, surcharge is 12% if the income exceeds 1 crore, and HEC 4%. These are all the various places where firm assessment comes. Okay, specific provisions with regard to firms. If you have a question, go ahead and read it once. Shall we? Okay. So before going into the practical arena, okay, some things which I want you to understand. Okay. A firm paid remuneration as per 40B. Okay, as per 40B, up to 90%, 3 lakhs, up to 3 lakhs, 90%, more than 3 lakhs, 60%. So let us take 15 lakhs is the profit of the firm. 2 lakh 70,000, up to 3 lakh, 2 lakh 70,000. Balance 12 lakhs into 60%, some 7 lakh 20,000. So totally 9,90,000 is paid. Totally 9,90,000 is paid. The assessing officer now disallows, saying that actually a partner of similar capacity in another firm is only getting 3 lakhs. Here you are getting 9,90,000, etc. So it is in excess of fair market value. So I am disallowing. That is different. That is different. Probably it does not have basic exemption, any other income like that. That is different. Can assessing officer disallow remuneration, saying that it is in excess of 40A2, but it is within 40B? No. No, not an acceptable answer.
The provision is as per act or whatever is in the deed.
Better answer, please. Better answer, please. Okay, just now I told you the answer when I did interest on capital. 40B is the fair market value. When 40B says interest 12%, that became the fair market value, and even for interest on loan, we did 12%. Here also, 40B is the fair market value. You cannot disallow. Director's remuneration, you can disallow, saying this is in excess, because there is no other where income tax law has said so much it can only be director's. But here, income tax law quantifies what can be the remuneration. So in great city manufacturing, in that case, can remuneration paid to partners as per deed be considered in excess of 40A2, even if it is within the limits of order? AO has to ensure that remuneration is mentioned in the deed, paid as per terms as per 40B. If these conditions are satisfied, do not disallow it. Okay. Have you okay? I cannot ask Ananya or any of the big fours or any people this, but you have all seen partnership deed. You have all been drafting partnership deed. Have you, what remuneration clause you put? Practically speaking, majority of the partnership deed நாம என்ன remuneration clause போடுவோம்? Okay, right, sometimes.
As per the act.
Yeah. Majority of the time what we do is as per income tax. We call, okay. Depreciation கூட அதேதான். Majority of the time we copy and paste 40B provision there. This is practically we are all doing it. 40B, why should there be a? So we say 40B. It says up to 3,90,000. Assessing officer disallowed, saying that as per deed nil. Deed should quantify. The court said no, he has quantified. Quantification need not be 1 lakh, 2 lakh. Quantification can also be as a percentage of profit. He has quantified. In order not to have a difference of between income tax law and there, okay. So this is Anil Hardware case where partnership deed did not specify the remuneration payable to each individual working partner, but lays down the overall manner of fixing remuneration. Okay, the manner of fixing the remuneration has been specified in the deed. The assessee firm is entitled. So in this case, they just pasted that's what is practically happening also. Okay, these are all the two case laws exclusively for a firm. Okay, Great City Manufacturing, I have put it in PGBP also in 40A2 here also. Okay, just to ensure that I am consolidating all the provisions. Am I clear to you? Okay, right. Before progressing, when will AMT be computed, or when you should be aware that AMT should be computed? 10A? Okay, 80I, 35AD. Okay, இது ரொம்ப யோசிச்சு சொல்றீங்க. Okay, right? Let me be clear about something. Okay, for a firm, AMT is only applicable for all non-corporate associates. How to remember AMT should be computed? I will give you the examination question. Examination question says compute AMT, ignore AMT, ida answer, everything they will give you. Okay, but for your understanding, I am saying if any of these appear, three things. One, expenditure under 35 AD, exemption under 10 AA, deduction under 80Is. If any of these three things comes, immediately your mind should open that they are also might ask us to do AMT. Okay, am I clear to you? If you, as much as Venkatesh, as you used to say, whenever you read the word manufacture, addition, like that you should remember this. As a concept, you should remember that whenever you see 35 AD or income oriented deductions or 10 AA, your mind should immediately open up. They are coming and asking me AMT also. I have given the class one assurance that I am not deviating from examination question. Either one or two adjustments extra I would have written, but all questions which I am working in assessments of entities are examination question. One, I don't know whether to call it as mistake or whether to, I'll tell you the reason also. I never put within bracket which year the paper question appeared, November 18, November 16, because of one reason. Law would have changed to a larger extent. Law has changed. I need to change the question. For example, yesterday, whatever 80 IA we worked out, the question was past question. Okay, putting the attempt within bracket doesn't, in my opinion, does not have very big significance. Other papers, FR law, you can have, okay, even I have told you, in accountancy of our inter, I still have balance sheet of 31,399. Okay, and I can do the same question again. Okay, whereas that is not possible in tax. So there is a, okay, no aspect of, but all these questions are somewhere examination question over the past 10, 15 years. PQR LLP set up a special economic zone, unit in a special economic zone in the financial year 2014-15 for production of washing machine. Unit in SEZ, which provision? 80. அப்படியே சாரோட development of SEZ 80 IAB, unit in SEZ 10 AA. She said, correct ninga. You seem to be knowing income tax of the income. Okay, so unit in SEZ 10 AA. கொஞ்சம் குயிக்கா 10 AA ஒரு வாட்டி பார்க்கலாமா? ஒரு, okay, what is 10 AA? Export profit will be allowed as deduction. What is export profit? Export profit is equal to total profit into export turnover divided by total turnover. Okay, ET by TT. Okay, export profit is equal. No, it will not be in your notebook. We did not do a question. We are now only going to do. Okay, total profit into ET by TT. ET na export turnover na money brought into India, not that just the turnover. Money brought, if they don't give that, we assume that it has been brought into, but money brought into India within September 30th, within 6 months from the end of the year, or money retained outside India with the approval of RBI. To remember the exemption, 100% for the 5 years, next 5 years 50%, next 5 years 50%. Shall I? Because I am getting the importance here only. That's why the unit was commenced in special economic zone in the financial year 14-15, 14-15, 15-16, 16-17, 17-18, 18-19. First 5 years over. So in our assessment year, we can only claim 50%. Repeating, why I stopped there is unit located in special economic zone from the financial year 14-15, first 5 years 100%, next 5 years 50%, first 5 years is over 14-15, 15-16, 16-17, 17-18, 18-19. 19-20, 20-21, 21-22, we are now in the 8th year. So we can only claim 50%. Okay, from the top, PQR LLP set up a unit in special economic zone in the financial year 14-15 for production of washing machines. Unit fulfills all the conditions of 10AA during the year. Under the Act. During the year 2021, it also set up a warehousing facility in a district of Tamil Nadu for storage of agricultural produce, which satisfies all conditions of 35A. Warehousing. சொல்லுங்க, அதுக்கு இதுக்கு சம்பந்தம் இல்லை. நீ கொஞ்சம் அமைதியா. ஓகே, நிறைய பிரெயின் நிறைய அந்த அப்படிதான் ஒர்க் பண்ணும். ஓகே. Okay. Okay. So coming back, now on the flow, why I stopping here? Because I have always told you, you need not remember specified business, the list. The question will either use the word specified business or use the section, okay, of that. You need not remember the list. So it set up a warehousing facility, fulfills capital expenditure of warehouse 75 lakhs, including cost of land 10 lakhs. Okay. So the cost of land cannot be claimed, building can be claimed. The warehouse became operational only from the current year and expenditure was actually capitalized. Other details: profit of unit located in SEZ, export turnover, domestic turnover. Profit from warehousing facility before 35 AD. Compute the income tax including AMT. Actually, they should not give, is my opinion. Compute income tax, our mind should think AMT also, but majority of the question they say including AMT for the financial year 21-22. Somebody's mic is open. Can you please mute it? Somebody's mic is open. Please mute it. Okay. Okay. Right. Okay. Okay. So right. Let's go into the answer before. Step 1 is always computing total income as per normal provisions. Step 1 is always computing total income as per normal provisions. Exemption under section AA. Okay. Export profit is equal to total profit into, okay, export turnover by total turnover. Okay, right? Export turnover by total turnover. The unit is in its 8th year of existence. Hence, exemption will be 50% of export profit. Hence, exemption will be 50% of export profit. So coming to the answer, 40 lakhs into 80 by 100. Okay, 80 lakhs is my export turnover. Total turnover is 80 plus 20, 100. Okay, into 50%. 40 lakhs into 80 by 100 into 50%. Am I clear to you? Income before claiming 35 AD, 1 crore 5 lakhs. Expenditure under 35 AD other than cost of land. Expenditure under 35 AD other than cost of land. So 75 lakhs minus 10 lakhs, 65 lakhs. Computation of adjusted total income under section 115 JC. computation of adjusted total income under section 115 JC. Total income after providing for all expenditure, exemptions and deductions. So always starting point is the total income as per the normal provision. Always that is the starting point. And expenditure under 35 AD. Exemption under section 10 AA. Less depreciation at the rate of 10% on warehouse claimed in 35 AD. Come out. Just stuck. Good. Got it? Shall we? Shall we? Base, okay, income or taxable income as per normal provision is 64 lakhs. As per ATI 115 JC is 1 crore 38 lakh 50,000. Base tax at 30% in the case of normal provision. AMT at the rate of 18.5% on ATI. Alternative minimum tax at the rate of 18.5% on adjusted total income. Will surcharge be applicable? Yes. Where the firm's income exceeds 1 crore, surcharge is 12%. Surcharge at the rate of 12% in the case of 115 JC as the taxable income has exceeded 1 crore. let me write the conclusion. Okay. In case, please write these things in exam. In case of non-corporate processes, tax payable will be either as per normal provision or as per 115JC, whichever is higher. So in this case, 2984 509. Where tax is paid as per AMT provisions, the difference between AMT and normal tax will be known as tax credit, which can be carried forward and adjusted against normal tax payable in future years. So in this case, this difference maximum period 15 assessment years. Next year also you will check normal tax or AMT, whichever is higher. Higher again subsequent credit. Only if normal tax is higher, in that year you can start availing the credit. Yes, difference will go on getting accumulated. 10AA. Yeah, you will get that. Yes. Yeah, practically 35 AD is simple because only the first year. After that, it will only be normal tax. But 10AA, 80A and all, you will take a longer time. That's why they have given 15 years carry forward. We continue. Manohar and Hari LLP is engaged in multiple business activities following are furnished. Net profit as per P&L 52 lakhs. Working partner's salary debited to P&L 40 lakh 20,000 as authorized by the interest on capital at 15%, 15 lakh 75,000 as authorized by the deed. Depreciation debited to P&L. Eligible depreciation as per IT law. Net profit includes profit from an undertaking in SEZ fourth year. 20 lakhs total turnover, export turnover. The unit has earned income from generation of power and eligible for deduction under 80IA 8 lakhs. You are required to compute the total income, also the AMT, and decide the final tax payable for the firm. Read through. AC for some time. What is that? Yeah. What is 10AA? 10AA is the benefit given for people who are bringing foreign currency to our country. Export of goods. It is not for export, it is for bringing currency. Okay. So the exemption is for the profit you have earned on the currency you have brought into India. So the law says how to find out that export profit. You know, if I give the option, I will say in domestic I had loss, everything is export profit. So they said proportionately total profit into ET by TT, export turnover by total turnover gives me export profit. I can claim 100% of the profits if I am in the first 5 years and 50% if I am in the subsequent 5 years. For you to understand the theory once, this is the theory. Available for export-oriented units located in special economic zone. Export profit is going to be getting the benefit. Export turnover means money brought into India in convertible foreign exchange within 6 months or money retained outside India with RBI permission. How to compute export profit? Total profit into ET by TT will give me export profit. Quantum of exemption will be 100%, 50%, 50%. Take your time, have a look.
So actually,
If you transfer it to an export profit reserve account, don't distribute the profit, transfer it to an export profit reserve account and get the deduction.
it is for the second
Book entry,
5 years.
last 5 years. First 5 years, 100%, no condition. Next 5 years, 50%, no condition. 11th to 15th year, if you still want to enjoy it, you transfer it to reserve account, you will get 50%. Chale, Raja? Okay, Anthony. Yeah. So now read this question once. Nana Raja. I'll come to that, Raja. Leave it to me. Don't worry. Shall I? We will first add the whole remuneration. We will first add the whole remuneration. Okay. Then excess interest on capital. Okay. As per law, only 12% is allowed. As per law, only 12% is allowed. The excess should be disallowed. In this question, I have paid 15%, which is 15 lakh 75,000. 15 lakh 75,000 divided by 15 into 3. Okay, 15 lakh 75,000 is 15%, 3% disallowed. 12% can only be paid, 3% should be disallowed. Depreciation as per books 8 lakh 10,000. Depreciation as per IT law 10 lakh 35,000. All of us. The answer now we get is known as book profit. The answer now we get is known as book profit. What is book profit? Profit computed as per PGBP chapter before providing remuneration but after providing interest on capital. So remuneration I add back. Interest up to 12% I have allowed already. Only the 3% excess I have. So this is the book profit. All of us listen for a minute. Less maximum permissible remuneration either as per act or as per deed, whichever is less. Maximum permissible remuneration either as per act or as per deed, whichever is less. As per deed, we all know it is 40 lakh 20,000. As per deed, we all know 40 lakh 20,000. As per act, please understand what I am saying. 3 lakhs into 90% plus 90 lakh 10,000 into 60%. Totally book profit is 93 lakh 10,000. Okay, I can do it like this. 93 lakh 10,000 minus 3 lakhs into 60% plus 2 lakh 70,000. Exceeds 3 lakhs, this is the benefit I get. Or you can go the traditional way, 3 lakh into 90%, balance 90 lakh 10,000. I got it because 9310 minus 3 lakhs. total profit into ET by PT into 100% as it is the fourth year of operation. So net profit is 20 lakhs, 20 lakhs into 150 by 200 into 100%. Are we clear? Deduction under section 80IA. They themselves will give you the amount itself, 8 lakhs. Are you clear? Are you clear? Continue the solution and compute the tax. Friends, continue the solution and compute the tax. Now you know up to this level. Continue. அப்படின்னா என்னது? இந்த HSA அவங்க ஆட் பண்ணுவா? This is the answer. This is the AMT working. Okay, Antonio, I will come. Yes, Sudha. Yes. Oh. Shall we? Anand and Co. LLP has submitted the following information. 3 units. Unit 1 commenced in a special economic zone on 31/3/2016. Which year we are in? நான் தான் தப்புடா ராஜா, நான் ஒத்துக்கிறேன். For exemption claiming 1516 fourth year நீ எப்படி வந்ததுன்னு நான் இப்ப முடிஞ்ச உடனே கேட்பேன். நீ அதுக்கு ஒரு பதில் ரெடியா வச்சுக்கோ. எதுக்கும் 15 சும்மா சொல்லி விடலாம், அப்புறம் எப்படி ஒரே சொல்லுவேன் ஃபர்ஸ்ட் இயர் சார் என்ன பண்ணுவீங்க அப்படின்னா 1516 1617 1718 1819 1920 2021 2122. We are in the 7th year. The examiner நீங்க ஏதாவது 1516 கூட 1617 தப்பு பண்ணிட்டா கூட you will still come to 50%. The examiner's intention. அதையும் மீறி நான் சொல்லுவேன் 4th year 2nd என்ன பண்ணுவேன் 16க்கு அப்புறம் நான் டபுள் பாஸ் பண்ணிருக்கேன் ஸ்கூல்ல அப்படின்றா. Okay, on 31/3. Okay, unit 2 is a warehouse in West Bengal for storage of agricultural produce from this year, and unit 3 is in a DTAA from 1st Jan. Profit of unit located in SEZ 20 lakhs. Export sales, 3/4 of the sale proceeds were brought into India within 6 months, specified time limit, and domestic sales. profit from warehouse before 35 AD, capital expenditure including cost of land. Profit of unit located in DTA 10 lakhs after deduction of 2 lakhs, which is disallowed under 43B. The firm fulfills all conditions. The firm is an unlisted public limited company converted into LLP. There is a MAT credit of 50,000 which is unutilized at the time of conversion. Very good. Cannot be used now. Compute tax liability under 115 JC. Read the question once. No, she's not informed today. Is it? Oh, you can download the app. That is. Okay. Okay. Now understand. Understand. Oh, Hari, is the video got stuck? Are you okay now?
Yeah, sir. Now it is okay.
It's getting stuck often.
It happened 2 times, sir.
Okay, next time I'll change the network. Now understand this question. Now, second information is for computing 10 AA. Third information 35 AD. Fourth information 10 lakhs plus 43B of 2 lakhs. Disallowance under 43B 2 lakhs. 12 lakhs. We will compute GTA. Deduction under 80IA. Is it 10 lakhs or 12 lakhs? Why? Yeah, it is revenue neutral. Sunil Vishwamitra, yesterday we saw a case law where we said if there is a disallowance, that becomes a revenue neutral. Deduction is 100% of profits computed as per PGBP chapter. In PGBP, you will disallow 2 lakhs, compute gross total income, 80IA, you will provide the entire 12 lakhs. Okay? Okay? Take your time, question is yours. பொறுமையா work பண்ணுங்க. Okay? Like our normal working AMT. I'm going into the answers. Unit located in SEZ. Okay. 20 lakhs, 5 lakhs is the exemption. We are getting 15 lakhs as the income. Specified business, 40 lakhs is the income. DTAA, 12 lakhs is the income, but fortunately this case law saves us. It's a revenue neutral disallowance. Okay, it's a revenue neutral disallowance, so that my total income is 55 lakhs. One minute, Sharath. I'm coming. on the tax. Just copied it, so the format is slightly different. 55 lakhs are you getting? Now this is my AMT working. 55 lakhs, add 35 AD, AA, 80 IA, less depreciation, I'm getting 1 crore 8 lakhs. October 4th. Reverse calculate பண்ணேன். Calculator எடுத்துக்கோ. March is 31. Feb is 28. Jan is 31. December is 31. And November is 30. So how many is complete? So another, you need another 29 days. So reverse less than 180 days or more. Even 180th day will be counted as a full year. And the second provision reads as less than 180 days, half of the eligible depreciation. So reverse and this is the computation for book profit. Surcharge போட மறந்துட்டியா ஷரத்? Yeah, okay. Surcharge போடலன்னு நினைக்கிறேன் ஷரத், கொஞ்சம் பாருங்க.
Okay, sir.
I accept that surcharge rate individual தப்பா போட்டுட்டேன்னா firmக்கு ஒரே ரேட் தான் படவா. So JD. See, you will remember section numbers in the examination. The popular section numbers you will remember. Yeah, that's enough. That's enough. You need not take special effort to remember section numbers. We'll do sufficient questions so that you will remember the section numbers. Now you will not forget 48 to 48, 43B. These are only getting repeated. We are just doing AMT related question. Already you are seeing 43B, 48. They will not go out of these provisions. May I? Anybody still doing? Let me know. Acharya LLP engaged in India is engaged in development of software and enabling IT enabled services located in SEZ. I leave it to you. It's a very, very simple question. You can work out very simple question. Okay, where export turnover, total turnover, everything will be given to you. Question number 5. That is an interesting question. Question number 5 is an interesting question. It's more to do with tax planning. For the financial year 21-22, a firm declares a total income of 80 lakhs before allowing 80 IA of 49 lakhs. However, the accounts of the firm are yet to be completed in full. The firm is of the belief that they can file their income tax return in December 22, due date being 31st October 22, leave around the extensions and other things. This is after ensuring that all aspects of their accounts are proper. Advised by working out tax liability and enumerate the various provisions of law. So, one aspect of 80I is if you don't file within due date, it's lost. If I file within due date, I can claim that 49 lakhs. If I don't file within that due date, I cannot claim. So, which is a better option? With an additional answer that you have to file within the due date, but there is always an option of revise the return. Okay, file the revised return later. Okay, that is the holistic idea, but let's work out. Computation of total income, assuming return is filed within due date. Gross total income 80 lakhs. Deduction under section 80IA 49 lakhs. Yeah, you can claim. But all these cases are mandatory audit cases, all ATIs. So you don't have that presumptive tax as an option. Okay. Okay. Whenever you claim ATI, you should remember AMT has to be worked out. So if I file my return within due dates, I need to pay 15 lakh 39,200. Okay, where return is filed within due date, tax payable, whichever is higher, 15 lakh 39,200. But the benefit I have is tax credit be carried forward is the difference between these two. Okay. Want a pen now? Okay. Suppose if return is not filed within due date, how it is going to change? Assuming return is filed after due date. Gross total income deduction under 80IA cannot be claimed as ROI is not filed within due date. So this 49 lakhs cannot be claimed. This 49 lakhs cannot be claimed. Tax at the rate of 30%. 80 lakhs into 30%, 24 lakhs. Add HEC at 4%. $24,96,000. Here you would have paid only 15 lakhs and still will have a tax credit to be carried forward. Whereas if you don't file it within due date, 24,96,000. Note, it is advisable to file within due date and revise the ROI once accounts are ready. Okay, this is, they call it as tax planning. This is a question where they are asking us what are all the two options. So we need to work out and show if this is the option. எல்லாரும் என்ன பண்ணுவாங்க exam tensionல, they will work out that this option, if I don't file return, you will remember 80IA I can claim. But if you claim 80IA, you have to work out AMT. That people will forget. If you claim a 80IA, you have to remember, you have to work out AMT. So என்ன பண்ணுவாங்க 967,200 or 2496 அப்படின்னு போட்டுருவாங்க. ஏன்னா they would not have think that AMT, oh, I can claim 80IA, I cannot claim 80IA. அவ்வளவுதான் யோசிப்பாங்களே தவிர, if I claim 80IA, I should also do AMT working. So that's why I always tell you that it's like how you remember manufacture. You should immediately know any of these three things you claim. 35AD, 10AA, 80Is. You should remember AMT has to be worked out. Unless the question specifically says ignore AMT. Many questions will say ignore AMT. I want only the total income computation. Am I clear to you? Okay. So this is our AMT workings. Okay. And when we do assessment of individuals, we will again look upon AMTs. Okay, AMT will appear, will be computed in any of these three circumstances, and remember to provide depreciation for 35AD. Okay, we'll continue tomorrow. I'm not extending now. We'll continue tomorrow for the rest of assessment of